What is up, everybody, and welcome to Futures Trading with NinjaTrader. I'll be your host for the show, Zunaid, and it's going to be a fun time. We've got a lot to discuss. We're going to discuss the markets in terms of the SPY, the futures, the mini, Bitcoin. A lot of great stuff happening. Jim and I had a conversation about that, but here we go. Futures Trading with NinjaTrader. Jim, how are you? This is Jim Cagnina, Senior Education and Training Specialist over at NinjaTrader. How you doing?
Pretty good, man. Pretty good. How are you?
Good. Can't complain whatsoever. I know you brought up some crypto interesting news, so we'll get to that in just a minute, but I'll go ahead and add your charts here as well. But tell me what's going on in the market here this morning.
Very interesting in the S&P and last session, we had what I'm going to characterize as a face-ripping rally, and maybe in what was characterized as a bear market. Buyers came in strong in the S&P. Today, we're having not that much continuation buying. Everything's kind of slowed down here. We're kind of in a smaller range today. And I think it's a little bit anticipatory for the other, events that are going to happen later on in the week. But right now, buyers are trying to get the traction still, and we'll see. The day's early right now on pretty much all the stock index futures, but the S&P in particular.
Yeah, it definitely looks that way. It looks like we're trying to possibly break the high day, but so far at the moment making a lower high, but we'll see if we get a little bit of a continuation on that. You have any open positions you want to tell us about? If not, we can move on to a couple of different levels.
Well, we have a bunch of markets to talk about. I do have right now in the micro E-mini S&P. Remember, this is 1/10 the size smaller than the regular classic E-mini S&P that we're used to. So it's $1.25 per tick or $5 per point. And right now I'm short 3 contracts right where my what I'm going to call this my label stick is right here, 39.15. I have some targets down below, and I have a stop loss above. And what I'm looking at here is the opening range, the high of the opening range, which is that first 30 minutes of the regular trading hours, was 39.32, give or take a tick, and the lower end of that range was 38.93 1/4. So we've been range bound ever since then, and we have a hard time breaking up and out above to make new highs today. So my feeling is there's a downward bias right now, and I'm looking for the market to break down and so I can get my 3 units off the table, and I'm scaling out. I'm not going to do all 3 contracts at the same price. I want to scale out, and then I'll start moving my stop downward.
So if I understand correctly, you are short at the 39.15.25. Stop loss is at 39.40, and you're looking to scale out at 39.05, and then a couple of ticks below that. Is that right?
That's right. And if I get this first unit, if we get this first unit, instead of having 3 contracts short, I'll be short 2 contracts, and I'm going to move my stop down. It'll be a 2-unit stop then to that break-even level, which is right below that 39.15. But I got to get that first unit first.
Gotcha. Now, is there a reason that you have this trade on? I know you mentioned you have that hard resistance around 39.33-ish. And that's the reason that's kind of giving you a little bit of conviction because we're having a tough time breaking above that.
Yes, for sure. I mean, right here where I have my crosshairs, it's going to be a tough time. Like you mentioned it early, we have swing high A, swing high B, swing high C, swing high D. They're all slightly lower, which means some of the steam's going out on the upside. So I like where we're sitting. Even though we're about 4 points, in the negative here, anything could happen. This could move really quickly.
Gotcha. Awesome. That looks good to me. You got other markets you want to talk about? You want to dive into the Bitcoin news we were talking about earlier?
Yeah, let me show the micro Bitcoin up here. Let's see, where is it at? There it is. So here's the micro Bitcoin, and actually we're going to have to shelf that other conversation for later, Sunil. But the micro Bitcoin market now is, this is looking pretty negative, right? And again, you could sell instead of buy, right? So if your opinion is the market's going to break down, then you can go short with ease, right? With your futures trading account. It's really super easy. So what I do, I'm trying to sell 2 units here at this moving average right here, which is my faster moving average. And then I'm trying to sell another unit up here for a long-term mid-range position in the micro Bitcoin at CME Group. So we're going to be patient on that. as we go forward here. And right now, there are my exponential moving averages. I got a 50, I have a 21, and an 8. So I'm trying to sell pretty much at the 8, and I'm pretty much at the next one up. And you could see it's been a really nice area of what I'm going to call resistance ever since we kind of broke through it way up here in April. So again, I'm using those as my areas of interest. I'm going to try to get short. And I think there's a lot more downside here. I'm not interested in buying just this, even though there's a bottom here that's, it has several days of support here. These are all baby candles, and we haven't really broken through yet. So that's where we're at.
Now, if you go ahead and get filled short on the 21,900 and the 25,300, where do you think you're trying to take profits? Like, is there another level you like to the downside? I see your stop loss would be a little higher than that, but.
Yeah, for sure. So, I mean, this is the ultimate target right here. It's 161.8% retracement as I drew this fib line, and that's pretty far down. I know, and we might not get there.
It is. You got my eyes perked there.
I know, but I think we can get somewhere in between here, right? I think we can get somewhere in between here. So we'll play it by ear as more data kind of comes our way, and we can decide. And again, the nice thing about this is you could trail your stops. You could do all sorts of different trade management based on how conservative or aggressive you want to be, or how short-term or long-term you want to hold a position.
Can you imagine if Bitcoin got to that $2,000, $3,000 level? I mean, that would just be, it would be insane because of how high we went, right? I'm talking about the 60 grand. I think 60-ish or something like that was a high. That would be massively insane. But I like the discipline of, you're like, hey, I'm going to wait for it to get to my areas to go ahead and sell. And then that's where I'm going to get it. I'm not going to try to front run it, if you will, which I know a lot of folks get in trouble for doing. And it does look like the market's coming down just a little bit here. Well, I know last time we talked about natural gas. And I believe we were waiting for like a $10 break if we got it, or there was also a level to the downside as well. So let's take a look at that. So I know there you go. So you were waiting for that 950 break towards the upside of 10. Obviously, we never got that. Did you end up trading this to the downside? Because I know we got that consolidation. It looks like around mid-June, it came on down.
Yeah, and so you can see I have these highs, like these labeled like C, D. This was E. We never made an F, right? We never made that. We never made an F. We never got to that $10 level where my dotted line is right now. And then everything turned around. And it's the fundamentals changed. There's a lot of natural gas in storage right now that's just sitting there waiting to be used. And I know the LNG folks are having trouble converting that into liquid natural gas to ship it overseas. So there's that little bit of a bottleneck right now. And because of that, this happened. This huge dominant candle happened here on June 14th. And sellers just kind of took over, and we had a little bit of a pullback and then back down here. I'm not interested in being a buyer right now, although one thing, we have a doji from last session, right? A little bit of a doji. And then today we have a little bit of buying coming in, and I want to compare that off of, at the bottom here, I have the RSI. So, we're right at that 30 level, pretty close to that 30 level. Doesn't look like we breached it yet, but this is when we talk about overbought, oversold. And this could be a situation where maybe that 30 holds and we kind of do a retracement back up in the positive direction.
Now,
go
ahead. Sorry, go ahead.
Yeah, but right now I'm not interested in buying natural gas at all. I want to wait to make sure we have a good foundation here on the bottom.
And of course, want to make it very clear, we always do, but Jim is just kind of giving us 2 cents. It's not financial advice or any of that. But now let's have a conversation about this. I love whole numbers. I believe you're a fan of it as well from our previous conversations. That $6 level, especially because towards the end of March, it looks like it was resistance, right? And now, of course, we all know this. Resistance becomes support. Support becomes resistance. If you were, and when I say you, I mean the viewers at home, if you were trying to go long here, if you were a believer on the long side, do you think that $6 level would be a good risk off level? So it's like, hey, 6 support, whole number. You've got the low there as well. Break a 6, you can get out. Or do you see something where it's like, hey, because of XYZ, I'm not a fan of that. You know what I mean? Just trying to play the other side a little.
Yeah, I mean, it's definitely an area of interest. It's something to think about on an intraday trade basis, right? We're getting close to it. We're getting close to it. But this market's going to behave a little different because not only is it a commodity, but it's also more of an institutional market. So you have real supply and demand factors and some bigger institutional investors that participate. So there's going to be a little bit less of that. And that's what I was thinking for the $10. I'm like, well, we're just going to get there because it's $10. But that didn't happen. right?
Right.
So I would say I would add it to my area of interest along with this double bottom that we have this
Yeah.
session and the previous session, and keep it in the back of my head. But I wouldn't trade that as a target, no.
All right, do me a favor. We're gonna get to sugar here in a second, Anissa. But let me go back to the micro minis if I can, because I do see the futures coming down a little bit.
All right,
So
let's
we
do
could
it.
go back to that. Yeah, it looks like
Yes,
we're
sir.
currently bouncing from what I have is VWAP, but there you go. So you got a little bit of a bounce. You're almost at break even. You were at break even. You're actually at profit a little bit as well. And now it's kind of bouncing back. So I mean, what I love about your trading style is kind of the patience to let it do whatever it wants. Like you have your levels, and then you're kind of not really paying attention to it. And I feel like you're able to do that because you're not oversized in the position, right? It's not like you're trading, you're trading the minis, like you said. And then it's not like you have a position where you're freaking out about, oh man, it just went 3 points in my against me or anything like that. So it's kind of cool that you have your levels and you know what your max loss is, which is if you get stopped out at 39.40s.
Yeah, that's exactly right. So this is a micro E-mini S&P, right? So it's one
Yeah.
tenth the size. If this was a classic, a bigger size, a contract that's 10 times bigger, I would not be this patient, right? It would be too much stress. It would be too much risk. A lot. I'm on a simulator right now, by the way. It's a real-time sim mode, but it's a different psychological footprint than when you're trading micros, and you could be patient. And now what I could do with the micros is I could spread out. Areas of interest to take a longer term point of view, right? So
Yeah.
my stop is pretty. Look at, I mean, this stop's pretty far away. It's
Yeah.
it's really 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 far away, and so are the targets. But I'm not stressed out. So all of the adrenaline, the dopamine, the serotonin, all these things cooking in my head
Yeah.
it's subdued a little bit. I'm gonna live with it. So it's a different strategy, and it gives futures traders, especially if you're brand new to this, right? Because you get a lot of leverage. If you're brand new to this, it gives you some peace of mind and gives you the ability to get involved, and then you could graduate to the classics, to the bigger ones.
Yeah. No question about it at all. Looks like Anissa wanted to take a look at sugar. So if we could go ahead
Yeah,
and take
that's
a look
that.
at those.
I don't have that chart up. That's a totally different exchange. So we
I
got to pass.
gotcha.
We got to pass on that one.
Gotcha. I apologize, Anissa. We'll try to get that tip for you later on. But is there anything else that you're kind of looking at in terms of different markets you're interested? I know we're going to talk about your tip of the day of what's to come here in a moment. But besides that, anything else
Yeah,
you have that you want to show of yours?
Yeah, for sure. And we talked about this also a little while ago. The currency futures markets are great markets to trade. In my opinion, they're better than the spot markets, the over-the-counter markets that everyone's used to. And there's micros and big ones as well in this. And so what you're seeing here is a daily chart of the Euro FX versus the US dollar,
Yeah.
right? And it's just that I'm looking at trend, I'm looking at ideas, and I'm really looking at the relationship between what the FOMC is doing and what the ECB is doing, and trying to make judgments on what's going to be the stronger currency, where's going to be the higher interest rate, what's going to be the tighter place to be. And right now we have a really nice, what I'm going to call kind of ascending triangle type pattern going on here at the last 5, 6, 7 days, 23.6% retracement. I am bearish here. And again, here's another trend line here. This is also an EMA. This is a longer term 50 exponential moving average. So again, once we get in this area here, I'd be looking for places to sell the Euro FX versus the US dollar. I think the US dollar is going to be stronger in the next, I don't know, several months.
Now, your stop loss, if you were to get into this trade, would it be the high of the previous consolidation, which it looks to be around 109? I'm talking about May to mid-June. Yeah, that area right there.
Yeah. So from a long-term position trade point of view, you're exactly right. What I would do is I draw my area of resistance in the form of a rectangle here, and kind of say, all right, this should be, if this chart is looking the way I think it is, this should be our area of resistance up there. So my stop would be once we breach these highs. I'm out. I'm wrong. I'm directionally wrong, right? So again, we'd wait to try to get short around the 23.6, and then you'd be out at the 38.2. And it totally jives. This fib line totally jives with my rectangles and my area of support and resistance. So I'd be comfortable there. From an intraday point of view, I think we might even had a trade this morning on that at the opening range show. Intraday is looking pretty strong today, right? It's rolling. You can see the dollar index on the right is pretty high right now. It's down 515. That's big. And now euro is way past R2 on an intraday chart. I wouldn't be interested in selling right this second for sure. Anything could happen, but we did have that triple top. I have those little arrows there, 1, 2, 3. And that once we broke through that triple top, I'll draw my crosshairs right there. Then it was off to the races. I mean, we closed above it, and it was buyers just took control right here and right now.
Yeah, that's a nice little pop there. What about wheat? You want to take a look at wheat and see if you have any levels there that you like?
Yeah, wheat's been interesting. With all this stuff internationally we have going on right now, you wouldn't expect this behavior in a daily chart. Let's take a peek. Let me open this up a little bit. So the U.S. net wheat exports on Monday, sales were actually 477,000 versus previous 239,000. So a lot of wheat is twice, yeah. And not only that, we're kind of exporting inflation a little bit because remember the U.S. dollar is strong. But in any event, that kind of stuck out to me. And look at this. I mean, this is just ever since we had this kind of scare here, and then even before that with the invasion, we have a really nice trend down on wheat. So again, I'd be looking for places to sell wheat right now. And the problem with a long-term trade on wheat is, the 23.6% is pretty high as well. And you also have to look at La Nina coming, messing up the weather front here in the U.S. But this looks like the trend is in the right direction on the downside. I'd be looking for places to sell wheat.
Now, when it comes to, well, we already did Bitcoin, but we can quickly do it if you'd like, Jim. If you just want to show your setup, just so, because we got a couple of new viewers. But there is a Bitcoin right there. Jim's looking to go short around that 21,900 and then 25,300. And I know we covered your profit target here. What was your stop loss? Is it the high of the previous consolidation, or are you going a little bit further out?
So same thing, and I'll use my rectangle to kind of demonstrate. So you see this consolidation here in this little dotted range that I have.
Yeah.
There was a lot of market happiness. You could look at it one way, or you could say market uncertainty. Either way, we stayed in that range pretty tight for a long period of time. I drew a rectangle just to touch the top of the bottom of my rectangle touches the top of the highest candle, which kind of corresponds to that 61.8%. So from a stop loss point of view, I'd probably be up here in my rectangle around that 50% level right here where my crosshair is.
Now, I know you're a fan of the fibs as well. Would you mind kind of telling us and showing us how you prefer to use your fibs?
Yeah, and so my point of view, it might be easier to show you in a different market really quick.
Yeah, sure.
So not this one. Let's go to the micro NASDAQ. So, it's okay to put, in my opinion, again, this is the micro NASDAQ. In my opinion, it's okay to do more than one fib. So I have a shorter term fib line, and I'm calling it my inside fib, right? And this is from literally, I mean, we're still in June, which is shocking, right? To see this, but the highs in June to the lows, and that's called my inside fib. So in other words, I'm looking at a shorter time frame. Right. To kind of see areas of support and resistance. Then I have another fib line that's drawn way back in time, right? And this is my outside fib, right? And this is all the way back to the highs back in March. And you could even do an outside fib if you really want. So it gives me two areas of interest right now. And I have not adjusted this. Let me do that right now. It gives me two areas to kind of consider. A longer term fib from a directional point of view. We're right at that 23.6%. This is a very important fib level right now to see if we can close above it or below it. In other words, is this bump up temporary, or is this a continuation pattern that we're going to see moving forward here? And then on the inside fib, it really helps me think about, all right, what could happen today? What could happen today? Could we get to that 248 level right here, which we touched, by the way, but could we close above it? And then alternatively, all right, the next stop down could be 38.2. So depending on if I'm long or short, these numbers are in the back of my head when I look at a daily chart.
What I love is kind of how clean your charts are. Like, you've got a couple of EMAs, you've got your fibs, but that's kind of it. You don't have because oftentimes if you have too many indicators or whatever, you get the analysis paralysis, right? It's like, oh, this is saying to go long, but oh, wait, this is here. I don't really know what to do. And then you just kind of end up over trading because you're getting mixed signals. And then your stop losses end up being a little too tight, and it can just kind of mess you up. So I do like how clean your charts are with the fibs and a couple of EMAs there.
Well, thanks. Yeah, I mean, it's, again, I look for areas of interest. There's so many good indicators that have been developed over decades technical analysis experience. I mean, these indicators are real things, right? Based on history. And so there's so many of them, though, that when you have more than too many of them, like you said, it's just confusing. So pick a few and try to find some area of consensus where these things come together and tell you an answer. Everyone's drawing fib lines. I'm not the only guy that does it. And maybe the magic is that there is a self-fulfilling kind of prophecy here that for stuff like Fibonacci retracements.
Got it. And then, of course, I do want to go ahead and let me pull up something here real quick. You want to go over the tip of the day?
Sure.
All right, give me 1 second. We got this cool intro, so I'm going to go ahead and play it. All yours. There you go.
Here we go. I'm going to call it the tip of the week even, because this is important.
Oh, that's right.
Wednesday, June 29th. It's 2 days from now. Yep. We have an interesting phenomenon. We have at 8:30 Eastern time, a gross domestic product is going to be released. Now, usually the consensus of this number is relatively on spot, and there's usually not a lot of surprises, but there could be, right? So that's happening at 8:30. All eyes are on that with respect to recession, interest rates, all of that stuff. And then a half hour later, Chairman Powell is going to be talking on an economic policy panel at the European Central Bank. So I don't know if he's going to physically be there or do it remote, but he's going to have 30 days to digest this GDP information. So number one, the market's going to digest it kind of violently, maybe. And then number two, he's going to have to talk about it, right? 30 minutes later. So it's going to be a really interesting Wednesday. So be prepared. Don't trade in front of this number, folks. This is my recommendation over decades and decades. Just be careful. If you do, make sure you have your stops in.
Well, what I do like is the fact that at least that information is coming out before the market opens, right? Because if you're having it during trading hours, then it can get really chaotic and you try to front run it and you get hurt. So it's like, cool, you know what? By the time I wake up and I'm ready to go at my desk, I'm hoping the market will be able to just digest everything that's happened. And we'll be able to kind of get some solid levels in and go from there. Yeah. So you never ever like to go ahead and kind of front run based on what your gut is telling you is going to happen, because those wicks are crazy now.
Well, not only that, I mean, even if what happens, you're right, the wicks are crazy, and even if what you think is going to happen should have happened, didn't happen. It's happened a million times. Like, all right, this number is going to be bullish. Sure enough, the number comes out bullish, and then the market sells off.
Yeah. And
so I've given up trying to stand in front of it. And what I'd rather do is wait and say, okay, let's wait to see. And then, if you're patient and you're waiting, and then you could kind of develop support resistance levels, which could give you a better chance after the dust settles.
Gotcha. Looks like you do have the SPY bouncing a little bit there.
Yeah.
Now, what's interesting to me is, as it gets closer to your stop, do you ever, and by the way, for folks that didn't hear this before, this is a live simulated account. That means this is not real money that we're trading with here. However, the data and the information you're seeing on your screen is real time. With that being said, say if the contracts get to 39.30, 39.35, 5 to 10 points away from your stop loss, do you ever try to add contracts in terms of sell some more because it's so close to your risk off, where you're trying to kind of play it better in terms of risk reward? Or are you kind of like, nope, it is what it is. I'm down on the trade. I'm fine with that.
So only if it was part of a premeditated plan.
Okay. Got it.
So this is a mistake a lot of traders make. At least remember, I was a commodity broker for retail futures trading, commodity broker for 20 years. And I've seen a lot of mistakes, but by continuing to think, well, I'm directionally right. I'm just going to sell another one and I'll move my stop. Just give me a little more room. That's right. Almost always a disaster of badness. Now, what you're suggesting is, hey, let's move our stop maybe a little bit. That's a different story. But if it's not premeditated, I wouldn't sell another one right here. I think we made a plan. I made a plan before me and you started talking. And I'm going to stick with it. And if I'm wrong, I'm wrong. I have my notebook right in front of me right now with my pen and paper. I'm going to write down exactly, what happened, and maybe try to figure out what I could do better next time. So I am not changing, chasing, adding to the position at this point.
So you're journaling your trades as well.
Heck yeah. I have a little bit of a coffee stain on top of it, but yeah, no, for sure. And I've been doing it. Remember, I started floor of the board of trade early 80s, maybe late 90s. I'm too old to remember.
Yeah.
And I'm still writing stuff down because, man, the paradigm changes all the time. The market changes, the market participants get bigger and bigger. And now we're in such a unique time in the futures markets with these huge ranges that it's new to everybody, not just me. So
Yeah.
yeah, I'm taking notes, man.
And I assume it's kind of like, hey, here's where I got in, here's where I got out, here's what my stop loss was, profit target, and here's what went wrong, right? I assume those are the key main ingredients. Is there anything else that you're kind of writing down as well or taking notes of?
Yeah. So, well, for today, it would be like, all right, were my entries correct? First of all, was I directionally correct or not? And then secondly, were my entries in a good spot? In other words, could I bought myself a better position? That's kind of number two. And then number three was my stop in the right place. So those are the three things I kind of think about when I'm
Yeah.
done, right? When I'm done. And then, sometimes you're just directionally wrong. And everybody is directionally wrong that day trades once in a while. So don't feel
Yeah.
bad about that. Don't ever feel bad about that. It's
Right.
tough. It's tough to know the direction. And so, that's just part of it.
Yeah, and that's of course why we go ahead and make sure you have proper risk as well. That way you always want to live to fight another day, right? You don't want to be over leveraged and just kind of wipe out your account because you had one bad trade, but you had 9 solid ones, but that one bad one went ahead and wiped out the 9 good trades as
Yeah.
well. But we've got a couple more minutes here. What I would love to do, if you're open to it, is kind of look at the daily of the futures and kind of see what levels you really like in terms of a trend change, or kind of a, hey, this was a rally in a bear market, and then now we have a little bit more downside. What levels are you keeping an eye on
Yeah.
that chart?
So 4,000 ish. Well, this is about the 61% on the S&P and the S&P 500 futures. So that 4,000 number is in the back of my mind right now. And that corresponds with that 61.8%. So if we get a close at above this 3988 or even better above the 4,000, and that is a psychological number in this
It
market.
is.
And that would kind of help with this idea that maybe we're not back in a bull market, but at least maybe we're in a sideways market. So that's kind of the next step in my mind, is to get to that to get to that level. Alternatively, if we have a hard time getting to that 61.8 over the next several days, then unfortunately I feel like we could have some more downside to go.
I like that. I like that psychological number of that 4,000. That's come. So, it's interesting. We bounced around 3,600. I was looking forward to us possibly testing 35, because to me that's a big one, right? Like you have your
Yeah.
500, your thousands, 500, your thousand. So that's what I was hoping for, to go ahead and start swinging a few contracts, just because I was hoping for a bounce from there. But unfortunately, I think the lowest we got was around 361 or so on the SPY on that end.
Okay.
And of
Yeah.
course,
So the low
go ahead.
of the futures here is 36.39.
There you go. Yeah, I was hoping for it to possibly test at $3,500. And of course, Jim trades every single day, every single morning, if you will, on Monday through Friday. I believe, is that right?
Yeah, that's right. Yep, the opening range is at 9:10 a.m. Chicago time. It's free to come. Anybody can come to the ninjatrader.com/events page to get the link for that. And then at the end of the day, we have a show called Bars Closing, which does just bookends both of the trading days.
Love it. Is there anything else that's going on in terms of event side that you wanted to tell us about to join you on?
Well, we do have is part of our yes. So Tuesday, Wednesdays, and Thursdays we have special events there from either a technical analysis expert, which is actually tomorrow. It's called the Traders Workshop. Then on Wednesdays we have an event called See the Futures. It's with the CME Group. I guess influencer Bobby Iacchino and Jimmy Urio. It's more of an interview show on a topic. That's a lot of fun. Those guys are great characters. And they have a lot of experience. And then lastly, every other Thursday, Anthony Credelli, we do a show with Anthony Credelli also on Thursdays, which is good. So those are midday shows, Tuesday,
Awesome.
Wednesday, Thursday.
Jim, it's always a pleasure. Thank you so much for your time. Appreciate you being here. And then we won't see you next week, because we've got Monday, but hopefully in a couple of weeks, we'll go ahead and catch up with you. That's Jim Cagnina, Senior Education and Training Specialist at NinjaTrader. And we appreciate you joining us for Futures Trading with NinjaTrader.